Good morning, everybody. We've got a full agenda today, so we're going to go ahead and get started. I'll ask for bill introductions. Representative Corbett.
Thank you, everybody. The bill I want to introduce today is House Bill 2142, and basically what that does is businesses that have been shut down or hours restricted and business restricted, there's a formula in this bill for them to recoup their property tax. And if you have any questions, I'll stick around, but that's the bill.
Thank you. Committee, are there any questions? Seeing none, are there any objections to the bill request? Seeing none, I would add to this that my leadership asked for you to introduce this. We don't usually do dual introductions, so that's probably a good sign for the bill.
Good for small business.
Yeah, thank you, Representative. Are there any other bill introductions? Seeing none, we'll open the hearing on Senate Bill 23. Amelia, would you mind giving us an overview?
Yes, good morning, Madam Chair, members of the committee. Can you hear me okay?
Yes, thank you.
Thank you. Senate Bill number 23 relates to buildings and improvements destroyed or substantially destroyed by natural disaster. Currently, pursuant to state statute KSA 79-1613, an owner of a homestead, as defined by statute, that was destroyed or substantially destroyed, that was destroyed or substantially destroyed due to an earthquake, flood, tornado, fire, storm, or other event or occurrence that the governor has declared a disaster, may apply to the Board of County Commissioners for an abatement or credit of all or part of the property taxes on the homestead. Subject to budgetary constraints of the county or taxing subdivisions, the Board of County Commissioners inquires into the application and may abate or credit the property tax. The bill itself would amend this statute to also make any building or improvement that's assessed as real estate also eligible for this process and abatement if they were destroyed or substantially destroyed by natural disaster. Currently, subsection C provides that an application under this statute must be filed on or before December 20th of the following year. There is a provision in this bill that would extend the deadline to December 20 of 2021 for tax years 2016 through 2019. What I forgot to mention is that this new provision providing for this abatement or credit for buildings or improvements destroyed or substantially destroyed would take effect with tax year 2016. So that is why there is an extension of the deadline to file, and the bill would take effect from and after publication in the Kansas Register.
Thank you, Amelia. Committee, are there any questions on the bill? Senate Bill 23. I would add to that, Amelia, this is the version that we passed out of the Senate Tax Committee last year. Is that correct? And that was introduced as Senate Bill 9 during special session?
Yes, this was introduced as Senate Bill 9 during the special session. I believe there was a similar version in Senate Bill 2 during the special session, and it originated as a Senate bill in your committee last year. I believe maybe Senate Bill 242.
Okay.
That's maybe I'm thinking of the number correctly.
That's
yes.
Fine. I just wanted people to be aware that we've seen this before. Thank you. Thank you, Amelia. We'll call the first conferee, Honorable Senator Kevin Braun.
Thank you, Madam Chair, and thank you, committee. I'm Kevin Braun, a former legislator from the Kansas City, Kansas area. I'm here today to speak in support of SB 23. This is a bill I originally submitted. As we heard, it was submitted prior, and it's one that had passed, but I submitted it in special session as SB 9 because I thought it was that important. The bill is a tax exemption for disaster relief. It uses similar language, as was stated, to a bill that was passed out of committee in regular session, but did not come above the line on the Senate floor. As you are aware, the bill deals with taxation of properties and buildings that were destroyed or rendered unusable after natural disaster. And yet, they were still assessed at the full value. My goal with this bill is to ensure those who've experienced the misfortune of being victimized by a natural disaster in Kansas are not then victimized a second time by having to pay full taxes on those buildings based on the value that they had at the point at which they were, before they were destroyed. This bill came to my attention after speaking with victims of the May 28, 2019 Linwood tornado. I had gone to that area, assessed that damage, and done some volunteer work, and it tears at your heart to see the position those people are in and the additional damage this loophole creates. This bill is an opportunity to correct what I believe is a past legislative oversight. Although we cannot retroactively address the legislative oversight of past victims of Kansas natural disasters, we can do so for those who were recent victims of the Linwood tornado and those who will be victims of natural disasters in the near future. We know that tornado season is very large in the great state of Kansas. I did some research on the tornadoes, significant impact on Kansas, and we know that this will happen again this year. With that, I ask for your support of SB 23 by both voting for this bill in committee and making this bill a priority for passage on the Senate floor in the 2021 session. I consider this bill an opportunity to pass a nonpartisan legislation that is good for the people of Kansas. Thank you for your time and consideration for this very important legislation. I stand for questions.
Thank you. Committee, Senator Alley.
Thank you, Madam Chair. Thank you, Senator, for being here today. The question I have is, I noticed in the bill that it said if this tornado or disaster happened on or after August 15th, particular year, but prior to January 1st, then the owners may make application to the board for credit against the property. Is that a full credit against the property at that time?
So it would be full credit for the property. The key here is that this then goes to the county commission. It goes to the county to be able to do that waiver. So, but yes,
It's not a partial reimbursement of their property taxes. It would be based on when the disaster happened.
based on the destruction of the timing of the destruction of the building.
Yeah, it is. Then it is prorated.
That is my understanding.
Thank you. Senator Amelia, would you like to address that?
That is current language in the statute. And my understanding is that the Board of County Commissioner inquires into the facts surrounding the destruction or substantial destruction. And my understanding is that the bill does provide for partial relief or relief from all of the property tax. And so therefore, it's within the discretion of the Board of County Commissioners. They can take into account when the destruction happened. You know, did it happen early in the year and prorate for the remainder of the year versus something that happened late in the year? My understanding is that the bill allows them to do that.
Thank you, Amelia. Did that answer? Yes. Okay. Are there any other questions? Senator Cluse.
Just, how would that affect someone, you know, like in a hypothetical situation, a tornado hits, but one house is left untouched? So obviously they would be affected by if the rest of the properties around them is destroyed. How does it affect that property that was untouched?
They would not qualify to be able to apply, if I'm understanding. Would that be correct, Amelia? If a property was untouched in the tornado, they would not qualify under this bill.
Correct. There's a definition of what substantially destroyed means. And there is a definition in A1 that it requires that the cost of restoring the structure to its before damage condition would equal or exceed 50% of the market value of the structure before the damage occurred.
Yeah, and if I may, this bill is attempting to allow currently, anybody that has their property destroyed under these circumstances, they would pay full property taxes for the year. And so this is allowing the flexibility that that would not occur. Thank you. Any other questions for the Senator? Thank you.
Thank you, Madam Chair.
Committee, we're going to go a little bit out of order, out of respect for representatives' time. Representative Timothy Johnson. Welcome to the committee.
Thank you, Madam Chairman. I was lamenting to the gentleman on the elevator with me this morning. This would be the first time I spoke before a committee, and I wanted to make sure he knew I thought senators were great. I didn't know he was on this committee. So, Rule 1, be careful.
And I would ask if you would be brief. We have 2 other hearings today. Thank you.
I am one of the people affected by this tornado. May 28th, 2019, sitting there with my son, my grandkids, 2 grandkids, my wife and daughter-in-law. My son was scheduled to deploy for his 4th tour of duty the next morning. When the tornado came across the TV, we began to watch it. I was pretty sure it was headed our way, but it was 31 miles away at that time. Kept an eye on the TV, and it didn't lift. And when they told me it was in Linwood, I was direct path, and then I looked on TV and I saw the helicopter with it. My house was right in line. I will never forget seeing it because I ducked out, left my lawn chair, got into the house, the basement with the rest of my family. I remember how the trees just went flat. It was 170-mile-an-hour winds when it got to us. And my son and I each held one of the little kids in our arms. Make sure we heard the sounds, I heard the crashes, I wasn't sure what it was, and 5 minutes later, we stepped out into that eerie light, and our house had held together, but it wasn't all there. There was roofing and all kinds of things. Right now, I'm out probably $160,000 on my home for repairs, not all covered by insurance because the high amount of flood waters that came in, I didn't have flood insurance. 2 inches of rain in 5 minutes, an inundated part of our house. Repairs to trees, et cetera, et cetera. As of yesterday, I'm still dealing with insurance. That's okay. Still had those 2 beautiful grandkids. But I got a little bill in the mail from my favorite government body, my county commissioners. I did not put this into my notes because I'd rather not everybody see my tax assessment. 5 months after the tornado damaged my house that much, they reassessed my house and increased its valuation $26,000 because houses in the neighborhood were selling for so much money. It wasn't based on what my house was. Now, I can afford that now. I've got my Capers retirement pension and all the money I'm making as a legislator to take care.
I'm really going to have to keep you on target.
And I'm done talking now.
No, not done talking. Talk about the bill, please. And-
Yes.
And
This will-
summarize for us.
This bill will help the people in my community, the Linwood area, all of those in that particular spot. Many of these were businesses, workshops, people that worked out because it's rural nature. They're not getting their money. They couldn't work, and then COVID hit. And our county commissioners at that time were talking about ways, but we needed a law change for us to be able to give this benefit back to our community. And I think it's necessary not just for this tornado. This is necessary for the floods that struck Coffeyville, that will come again in Kansas. Like you always say, if we don't like the weather here, wait till tomorrow. And I think we need to protect those homeowners and hardworking people. And I thank you. Any questions for me?
Thank you, Representative. Appreciate your brevity. Committee, any questions?
Thank you so much.
Thank you very much for being here. Thank you. Is there anybody else? I know we have another representative in the room. Would you like to? Okay. I assume you're in support of the bill, though. Thank you, since it is his home area also. Committee, I would ask we turn our attention now to Brian Habjon online. Please. Habian. I pronounce phonetically. Brian, are you with us?
Are you able to hear me?
Yes, could you give us a brief overview of your testimony?
Yes, I submitted written testimony, was there in the chambers last year when the bill was, or with the version of the bill was originally presented. And my main point would be similar to what has been spoken already. The biggest issue when you have a natural disaster, the state law has been clarified there and spoken about. You have to have a structure being your residence. And the attempt with this bill, in my opinion, is to help those of us that were affected by this tornado, that where our houses were not 100% or reached a 50% threshold, but barns, outbuildings, shops, things that those of us that lived in the area saw completely destroyed. Unfortunately, the county commissioners had to apply the laws equally, and there is no current provision for them to allow us property tax abatement due to this natural disaster. And I would strongly urge the committee to pass this bill clean and do not mark it up with other things. I think that is a big issue that has plagued many bills in the past, adding this to other taxation bills when we have a relatively hopefully non-controversial bill where we're fixing a loophole, not changing the taxing structure. We're still giving the county commission of each particular county the ability to accept these applications. It's not automatic tax deferral or tax relief. It is an application process, as I understand.
Thank you, Brian. Committee, any questions for Brian? And Brian, are you representing yourself today or another entity?
No, I'm representing myself as a homeowner in Linwood, Kansas that was directly affected by this tornado.
Thank you, Brian. If conferees would state their name and who they're representing for the record, that would be great. So thank you, Brian. Appreciate it. Next up is Mike. Welcome to the committee.
All right, if I remove this to speak?
Absolutely.
My name is Mike Steben. I'm the county commissioner representing District 5, which is the south part all along the river and then up to Tonganoxie, directly affected by the tornado. And what we found was when we were going through the process after the tornado hit was that we could abate these homesteads if they had been destroyed more than 50%. And our county appraiser gave us a document that looks similar to this and listed all the homesteads and all the amounts. But then we had a lot of people that were saying, hey, I have a dairy, I have 5 outbuildings, they were destroyed. Or we had a greenhouse, $8 million worth was destroyed. And they came to us and they said, well, you know, we'll get the county appraiser to document that, but there's really nothing in the law that allows us to abate your property taxes. So they have nothing and their property taxes are still gonna have to be paid. So that became a real issue, and we did, the Senate Bill 242 was acted on last year. The total amount of damages from Leavenworth County for the personal property taxes, outbuildings and barns and such, was $26 million. That's the amount of taxes we were not allowed under current law to abate, which under the law, if we had budgetary provision or had the ability to, we could have abated that under this law change. So that kind of answers that question. I want to just give you a couple, little bit of information. The F4 tornado that hit Leavenworth and hit Douglas County, Leavenworth County, and affected Johnson and other counties nearby. The path was 31.82 miles, 18.7 miles in Leavenworth County.
Mr. Commissioner?
Yes.
I'm going to bring you back on the bill.
Oh, okay.
We understand the importance of the tornadoes and everything, but.
Okay. Anyway, I was just letting you know that I was just going to let you know that 45 homes were destroyed, 159 outbuildings, which is directly related to the bill. Those are the outbuildings we'd like to be able to have the ability to abate the taxes on. We would like to keep this bill non-controversial and bipartisan. And last year it certainly was, we had the help of Representative Horn, Senator Holland, others. I believe there's agreement across the aisle on this, and I believe it's not controversial. It got caught up in the pandemic, and we would just ask that you would do all you can to help the citizens down in this area and across the state that are affected by these storms. and get this bill through to this year. Thank you.
Thank you. Would you stand for a question?
Oh, yeah, what? Go ahead.
Committee, any questions? Senator Alley.
Thank you, Madam Chair, and thank you for being here today. Those outbuildings, do they have an assessed valuation separately?
Yes, they do. The appraiser went in and valued them, and this was included in your packet. And it gives, what they do is they give all the valuations of the outbuildings. For example, like on this, I won't give the name, but it says the name, their address, and then it lists the amount of damage. It's 100%, and it was a barn, and $42,000 worth of damage. And that's on one individual. So the county appraiser went through the damage and then listed the outbuilding personal property loss, and then gave it to the commission. And when it came to the commission, our attorney said, hey, you can't, this isn't eligible. So we wanted to bring it to your attention, and I think it's going to benefit our state, and lots of people are involved in these situations. Thank you.
Mike, for some reason, that didn't get included in the email that you sent, so would you?
Oh, it didn't?
No, so we would request a copy of it, and we will get it distributed to the committee. You can just email it to us? Okay. Well, yeah.
You may not want it.
No, I don't mind. I just think some people are germ
Oh, yeah. Well,
phobes right now, so.
it's been
respectfully,
sanitized.
It's fine. There you go. Thank you. Committee, and Senator Steffen.
Thank you, Madam Chair. Just a quick comment. I want to thank you for being here as a county commissioner representing the individuals. That means a lot to me, and I appreciate that. Thank you.
Thank you, sir.
Committee, any other questions? Thank you.
Thank you.
Is there anybody else that would like to testify for the bill, Senate Bill 23? Seeing none, committee, I would draw your attention to written testimony from KLA, the Grain and Feed Association, Kansas Corporation, and Kansas Farm Bureau. Committee, we do have an opponent, Alan Dinkle. Are you online, Alan?
Yes, I am. Good morning.
Thank you. Good morning.
I'm Alan Dinkle. I'm city manager in Junction City. Population of about 24,000, and we have assessed valuation of 176 million. But my concern, or my past experience, was a tornado in Hoisington, Kansas on April 21st of 2001, when 200 homes and buildings, or nearly 200 and businesses, were destroyed, including my home. So I've been on the side of losing my home. If this bill had been in place to abate property taxes, that was talked about that then, it would have devastated our community, because even the next year with not the rebuilding back, we saw valuation drop by our valuation drop by 18%. It had been just devastating. I think most small Kansas counties, small Kansas cities would have a real problem with that. Because even the next year with not houses being built back up, our 2002 assessed valuation was 18% down. Luckily it grew back, but if we'd lost 2001 taxes as well, it had been just extremely tough in our community to move forward. At the same time, in a small community where you use utilities to help some government transfers, be it water or electric, in the case of Hoisington, we lost our electric revenue that year as well, and water revenue, because there was no homes there. And plus there was probably additional 200 homes that were damaged, somewhere in that 40 to 70% that didn't get quite totaled. I just think it's a bad bill for communities. I understand the loss. I've been there myself. Luckily, I had insurance. I had good enough insurance that we took care of ourselves and kept ourselves whole. And so therefore, I'd ask that you do not pass this bill out of committee, and I stand for questions.
Thank you, Alan. Committee, any questions? Seeing none, thank you for your testimony. Committee, I would also draw your attention, the Soybean Association. It didn't make the list, but their testimony is in the packet. We have neutral testimony from the League Trade. Welcome back.
Actually, my first time in Senate Tax this year. Thank you, Madam Chairwoman. Our concern is the nature of cities. Cities are very compact geographically. So when the Greensburg tornado happened, 95% of the city was wiped out. If this bill passes, we have no ability to get revenue in the current year, the next year when valuations are at zero, and potentially the third year. This devastates us financially. So we had worked out a deal last year with some of the proponents of the bill that if more than 25% of a city is damaged, that a city could abate their portion of the taxes only. And we would ask that you add that amendment to this bill. We think it's critical for cities just because there is absolutely no way to function, and you need the police, fire, you need all those things that happen after a disaster. And if you have no property tax, you have no sales tax, you have no franchise tax, there's no way to function if this bill passes on a large disaster. I'll stand for any questions.
Thank you, committee. Senator Steffen.
Thank you. And looking back at Alan Dinkle's written testimony, it says in his example that FEMA and KDEM funds covered 90%.
They don't cover revenue replacement. They don't cover revenue replacement, but they'll cover damages to city-owned property. So you have 90%, and then you still owe that 10%, but it doesn't cover the revenue replacement from the revenue that you lost.
But they did recover 90%.
That's on property damage that the city's physical plant that gets damaged. And any extraordinary costs you have are reimbursable, but not normal day-to-day cost.
Committee, any other questions? Thank you, Trey.
Thank you.
Is there anybody else that would like to testify neutral on the bill? If not, we'll close the hearing on Senate Bill 23. We'll open the hearing on Senate Bill 70. Amelia, would you mind giving us an overview?
Certainly, Madam Chair, members of the committee. Senate Bill 70 relates to retailer sales tax and would remove the sunset of the exclusion of certain cash rebates by a motor vehicle manufacturer from the sales or selling price, and would also exclude discounts and coupons from sales or selling price for sales tax purposes. Specifically, if you look at your bill on page 7 and 8, this bill is proposing to amend KSA 793602, which provides definitions for the Retailer Sales Tax Act. And it amends the definition, it would amend the definition of sales or selling price. Currently, the cash rebates granted by a manufacturer or to a purchaser or leasee of a new motor vehicle, if paid directly to the retailer as a result of the original sale. Currently, that provision has a timeline. It's effective from July 1st, 2018 and ends June 30 of 2021. The bill would remove that sunset, so making this exclusion from the sales or selling price to continue into the future. Also, the definition of sales or selling price would be amended to provide that discounts, including coupons, even though they may be reimbursed to the seller from a third party, that amount of that coupon is not included in sales and selling price. And that's the stricken language that you see on page 7 and 8 is to remove the provisions that currently say those coupons, the value of those coupons is part of the selling price. And this bill would take effect from and after publication in the statute book, and I would be happy to answer questions.
Thank you, Amelia. Committee, any questions? Seeing none, we have one conferee, Don McNeely. Welcome.
Morning, Madam Chair, members of the committee. I am Don McNeely, and I serve as president of the Kansas Automobile Dealers Association. And I appear for you this morning in support of the provision of the bill that would remove the sunset on motor vehicle rebates incentives that would go off on June 30th of this year. This issue has had quite the history in this building. My first session here was in 1991. My electronic files only go back to 1996, and that time this provision in regards to sales tax exemption and manufacturer's rebates was introduced by Representative Doug Gatewood of Columbus. In any case, and I know time is of an essence here, but this issue or proposal was passed in the 2018 session. It passed this committee, passed this committee unanimously, passed the Senate 30-0, got to the House, we had a hearing in the House took no action. That year in 2018, went to conference committee. The 3-year sunset was inserted in conference committee. The Senate again passed it 38-0. The House passed it, believe it was the last tax bill of the 2018 session, and then the House passed it 111-6. This so happens this will be that was the second time the sunset was put on this proposal, as it was once done in 2006. I remember then Senate Majority Leader Derek Schmidt saying, Don, this will never be, this sunset will continue in terms of the sales tax exemption. Of course, it didn't. While this issue is not new to this committee, it's extremely important to the consumers of the state of Kansas, as well as our industry, with new car transaction prices over $38,000 now, and sales tax, with including the local sales tax rates approaching 10%. Taxing these incentives is extremely detrimental to the sale of new vehicles, especially when you also consider the state of Kansas makes more money off the sale of a vehicle than the actual selling dealer does. So with that, I appreciate your time this morning and appreciate your support for Senate Bill 70. And with that, I'll stand for any questions.
Thank you, Don. Committee, any questions? Seeing none, thank you, Don.
Thank you.
Committee, I would also, is revenue, are they online? Committee, I have been told that the coupon portion of this bill would remove us from the compliance with the streamlined sales tax. I think that we should try to ask for an exemption. To me, this is, I guess, my attempt. We haven't been able to lower sales tax on food. So I was trying to get rid of the fact that if you spend money in the state of Kansas on a manufacturer's and use a manufacturer's coupon, where the difference is in Kansas, you pay sales tax on money that you did not spend. It makes no sense to me. So I just want you to be aware, though, there is a compliance issue with the streamlined sales tax. We'll make sure that we have revenue available before we work the bill, so that if there's any questions. Committee, any other questions on the bill? Seeing none, we'll close the hearing on Senate Bill 70 and open the hearing on Senate Bill 46. Amelia, would you give us an overview?
Yes, Madam Chair, members of the committee. Senate Bill number 46 relates to income tax and would provide a subtraction modification from federal adjusted gross income for certain amounts received from certain retirement plans when determining an individual's Kansas adjusted gross income. The bill would amend KSA 7932-117 to subtract from an individual's federal adjusted gross income the amounts received by retired individuals under employer-sponsored qualified or non-qualified retirement plans, including plans created by self-employed individuals, to the extent included in federal adjusted gross income. The provision would begin with tax year 2021. And if you are looking at the bill itself, you can see the new language about in the middle of page 9. And the bill would take effect from and after publication in the statute book. And just as a reminder for those of you who may be unfamiliar with the Kansas income tax, you'll see in order to arrive at Kansas adjusted gross income, there are addition modifications and subtraction modifications. And you can see in 7932-117, subsection B is the list of the addition modifications, and then subsection C is the list of subtraction modifications. So those are items that are subtracted from federal adjusted gross income in order to arrive at Kansas adjusted gross income. And I'd be happy to be available for questions.
Thank you, Amelia. Senator Steffen.
Thank you. What would be the possibility to create some real-world examples to see how this kind of flows through to a person's taxes, just to get a feel for its effect?
Eddie, would you mind putting that together for us?
Yeah, I'll put those together, or
Thank
a
you.
couple or a few examples.
Do you need more specifics, or is that enough information for you to put something together?
That's enough information for me to get started. Might want to run them by you and Senator Steffen and get some follow-up if you need more
Wonderful.
specifics.
Thank you, Eddie. Any other questions for Amelia or Eddie? Seeing none, we'll welcome Michael Austin.
Thank you, Madam Chair. Of course, I know that this committee has a lot of work that it's trying to get done, so I will keep my testimony brief as can be. My name is Michael Austin. I'm the director for the Center of Entrepreneurial Government at the Kansas Policy Institute, and I'm speaking in support for Senate Bill 46, which provides a subtraction modification for distributions for employer-sponsored retirement plans. As we all know, Kansas is one of the least tax-friendly state for seniors. Pick any one of our different types of our tax structure, whether you want to look at sales tax, whether you want to look at property tax, and even on income tax, when we're looking at either Social Security income or at least what this bill is trying to adjust for, which are for employer-sponsored retirement plans. If this bill passes, of course, not only can it encourage more savings and, of course, keep more seniors or people that retire in their homes, and most certainly keeps them afloat in this downturn, but of course, it even puts them more on par with public sector employees in which their distributions are also not taxed. So there's both a fairness issue as well as making sure that we give more resources back to Kansans so that they can hopefully recover from this COVID downturn. And with that, I leave myself open to questions, Madam Chairman.
Thank you, Michael. Committee questions? Senator Steffen.
Thank you. I know you said this would put retired people that weren't past government employees on the same playing field, in that capers, you don't pay income tax, state income tax on capers distributions. Is that correct?
That is correct. That is what I said, yes.
Okay. And while the privately funded retirements do.
That's correct.
Okay. Thank you.
No, that's good for clarification. Senator, any other questions, committee? I have a couple. One is, I would draw your attention to the fiscal note, committee, but also I would ask, would you be receptive to the bill being amended to add self-employed individuals also, 401k types and others?
I would. I don't want to speak too out of turn, but at first glance and hearing this amendment, I would think that it would be, I would support, because the whole purpose, of course, is to make sure that Kansans can get those resources so that they can recover as quickly as possible, as well as that tax fairness. So while I can't unequivocally say that we would support at face value, it does sound appealing.
Right. I would like to get a fiscal note on that. We'll request that from revenue, but it makes sense that it applies across the board to retirees. I think it would, it's worth looking at least. Committee, any other questions for the conferee? This is a new idea that we have not seen before, so I appreciate you bringing it. It seems like everything we've done before is previous issues, so I like thinking outside the box for solutions.
Very good.
Thank you.
Thank you.
Is there anybody else that would like to testify on the bill? Any opponents? Neutral? Seeing none, we'll close the hearing on Senate Bill 46. Committee, we do have a few minutes. That's what I was hoping for and rushing for. I apologize, but we do need to get some work completed on Senate Bill 22. Amelia, will you give us an overview?
Yes, Madam Chair. Senate Bill 22 provides several Kansas income tax changes. They include several modifications for determining Kansas income. It addresses the election of Kansas itemized deductions by individuals. It expands the eligibility for the expensing deduction and amends the calculation. It also provides an exemption for unemployment compensation income that's a result of identity fraud, and it would increase the net operating loss for corporations.
Committee, are there any questions for Amelia?
Oh,
Please continue if you have.
and I also want to remind the committee that when the committee started working this bill last week, there was a proposed amendment that I believe was adopted by the committee relating to the itemized deductions provision that would move the date. I'm trying to find my copy here. That would move the date
To 2020.
back to tax year 2020. Correct. Thank you.
Thank you, Amelia. Committee, any questions? And you still have your handouts on the fiscal notes committee. So I would draw your attention to, we did increase the fiscal note with that amendment. If anybody would like to reverse their position, now is the opportunity to do so. Senator Stephan. Oh, I'm sorry. Okay. Is the committee comfortable with that amendment, leaving it? It did increase the fiscal note, but if anybody has heartburn, now's the time. Seeing none, we'll move on. Committee, I have another amendment, and this one is rather lengthy. It's a balloon amendment. Is there enough copies? Amelia, would you like to explain the amendment?
Yes, I will. Sorry. The proposed amendment in this balloon, I believe up in the corner you should find today's date. It would essentially move the effective date of several of the new provisions from tax year 2020 to tax year 2021. And those provisions relate to the treatment of the disallowed business interest expense and the disallowed meal expense, the treatment of the disallowed FDIC premiums, the allowing 100% of GILTI, the global intangible low taxed income subtraction, and the treatment of capital contributions. All of those would be moved to implementation to tax year 2021. It would also provide an amendment that would remove the provision that includes GILTI as foreign dividends for tax years prior to 2020. And it would also remove the net operating loss carryback provision. If you look at the balloon, you'll see that the provision of Section 5 is struck. What it means is that essentially the bill's amendment of 7932-143, if this balloon were to be adopted, 7932-143 would not be a part of this bill and would not be amended. So we would just be removing that. The current statute would still exist. We would just be, there would be no amendment proposed in the bill. And then also, if you look at the front page of your balloon this morning, there is a name for the provisions of this act. That it would be referred to as the Rebuilding Employers and Livelihoods While Investing in Everyone's Future, or Relief Act.
Committee, are there any questions? I know that's a lot to digest. Senator Stefan.
Can I ask the origins of this amendment?
Absolutely. That, I am bringing this amendment before the committee in an attempt to, which I do not enjoy doing, but lowering the fiscal note. Mainly what it does is it strikes the loss carry back, and that is about a 100 million decrease. And then what it does also is changes the dates so that a majority of the bill is implemented in 2021. So it would impact tax filers when they are filing in 22 for their 21 tax returns. So we remove the retroactivity of the bill, basically. I would also ask that revenue, Eddie, would you mind getting with them, that they get us an updated fiscal note? And this time when they give the fiscal note, I would ask that they give it in the sense of 2021, 2022, 2023, and so on. I've never seen a fiscal note that combined the 2021 and 2022 impact. So if we could get that breakdown from revenue, that would be wonderful.
Yeah, I will follow up with the department.
Thank you. Senator?
Remind me the history of this bill very quickly, please.
Oh, yes. The bill comes to us from a couple of reasons. It's a combination, but the majority of it is a result of the 2017 federal tax cuts. And if we would not make these changes, Kansans would continue to pay in more, as it was unintended, I think, from the federal law to raise our state income taxes by their tax cuts. But that's what occurred. So this is an attempt, as I handed out last time, I think it would be wise if we could also increase the standard deduction, but we've seen what that would do to the fiscal note. So this is an attempt to address the tax increases without an exorbitant fiscal note.
It passed as a different bill.
It's passed several times. In 2018, it passed the Senate combined with other stuff, but individually, and it failed with 4 votes in the House. I think 7 members that, well, we won't get into the details of that. But, and then it passed 2 times in 2019 to be vetoed by the governor. So this is an attempt to, yes. And the expensing portion of the bill, that actually should have been fixed years ago. We've been trying to fix it for a while. But what happened was in 2012 with that legislative change, the expensing passed in 2011, and then it was removed in 2012 because it was no longer needed because small businesses weren't paying income tax. So when the income tax was reinstated on those businesses, the expensing portion was inadvertently left out. So this is an attempt to put that, what was in place in 2011, back into place now. And Amelia, I would ask on the expensing portion, is it dated 21 to when to take effect?
Yes, the expensing amendments, and that is current provision of the bill, is that those changes would take effect with tax year 2021.
And the other item that is new to us is clarifying that if your identity was stolen and somebody benefited from it, that you do not owe income tax. That's a result of what's been going on with the unemployment system. I had one individual tell me yesterday he got a $500 million statement from KDOL. His business can't handle that. There's no way. And this is just to clarify that obligation won't be for him. Committee, are there any other questions? I know there's one other item too, that the meals. The deduction on the meals just was something that the federal government had put in the CARES Act. It was an attempt to promote local use of restaurants. But it can easily come out. It's whatever the wishes of the committee are. Senator Steffen.
Chairman, when would it be appropriate for me to state that I don't like this amendment?
Now's fine.
You know, this was an unintended tax increase originally. We've heard that testimony. And we've passed it multiple times, and Kelly's vetoed it. And we're just backtracking too fast for my taste. I think we're backing down and giving away, it's not even a tax cut. You can't even call this a tax cut, and we're backing down. And so I personally don't support the amendment. Thank you.
Thank you, Senator. I understand. I understand where you're going, but I do, like the previous bill that we heard, I'm hoping that we can pass some other legislation that kind of helps out in the, with the bitterness of this amendment. But I do think that we have to be realistic. We have to try to get, it's kind of like the property tax bill. You know, we started out with a product and we made some amendments to it, and those amendments, we passed the bill 34-1. So it's, you know, compromise can be a dirty word, but I think that we get solid legislation that we can actually get into law. But Senator, you are up, you can vote accordingly as to how you need to. At this time, I will move my amendment. Is there a second on the amendment? It's been moved by Senator Tyson, seconded by Senator Clays. Any discussion on the motion? Any questions? Senator Steffen.
Thank you. I think voting for the amendment is voting for a tax increase. It's based on the failure to pass this through like we had historically done. I do want to be on the record saying this is, for all intents and purposes, a tax increase. Thank you.
Thank you, Senator. Any other comments or questions? I'll debate that comment, because if we get 0, that's the increase. If we get nothing. So I am going to attempt to move forward with this amendment. And I understand your concern. I'm with you 100%. I just know that the reality of the situation is this bill is better than nothing. And right now, I will take this bill in its form. So committee, any other discussion? Seeing none, all those in favor of the motion, say aye. Aye. All those opposed, say nay. Nay. Would you like to be recorded? It puts you on record. Otherwise, it just says that it passed. Sure. Okay. Senator Steffen would like to be recorded as a no. Anyone else? Seeing none, the motion passes. Committee, what are your wishes on the bill? Senator Alley.
Thank you, Madam Chair. I make a motion we pass the Senate Bill 22 as amended.
Thank you. Is there a second? Okay, it's been moved by Senator Alley, seconded by Senator Clays. Discussion on the motion. Seeing none, all those, Senator Corson.
Are we going to be able to see the updated fiscal note before we vote on this, or no?
That hounded out last week. It was about $170-some million.
I thought that you just requested a fiscal note from Mr. Penn. I'm sorry if I misunderstood what
I
you were.
requested the years to be changed because
Okay.
they combined 21 and 22.
Understood.
So I think that's going to lower the fiscal note considerably.
Understood. Thank you.
broken out.
Thanks for that clarification.
Yeah.
Thank you.
Not considerably, but probably about $30 million. So that, my attempt is to give an accurate depiction. But the fiscal note that was handed out was approximately $170-some million. Is that correct, Eddie? Do you have that information in front of you?
I am trying to pull that up right now.
Okay. We handed it out last week, and I know it was in an email for the committee. Yeah, that's it. So any other questions, committee, or discussion on the motion? All those in favor say aye. Aye. All those opposed say nay. Would you like to be recorded? Okay. The motion passes. Committee, is there any other business to be brought before us? Seeing none, we'll adjourn. Committee, I want to give you a heads up. The bills we heard today, we do have 2 hearings this week, and if we have time left after those hearings, I would like to work some of these bills if possible. So with that, we're adjourned. Thank you.